this. Hi, traders. Hello. Hello, traders. Welcome to another live Q&A session with Oliver Velez. Of course, my name is Oliver Velez, and I'm your trader for life, or at least that's what I'd like to be. All right, guys, it's been a couple of weeks since I've done one of these. Some of you might know that I am traveling. I'm currently in Malaga, Spain, and when I'm traveling like this, it's not always possible for me to keep to the live schedule. Also, unfortunately, there are some internet issues in various hotels and things of that nature, but I'm very glad to be able to do this with you today. So it's been a couple of weeks, but I hope you brought your questions. Usually what I do is take anywhere between 45 minutes and an hour to answer basically anything you'd like to ask. Now, I have created a special theme for today's Q&A session, which is going to be Bitcoin, simply because I continue to want to really pound the table on this because of the opportunity that I think Bitcoin is presenting over the next several months, next several quarters, and into the next several years. So I want to keep continuing to pound the table on that. But in truth, you can ask anything you'd like. All right. So glad to see you guys here. Glad to see you guys here. All right. And just to make today's Q&A session just a little simpler, I will be taking your questions directly from the YouTube live chat here. So welcome once again. All right. Let's get started. What shall we talk about today? All right. What can we talk about today? All right. Okay, JWDC is asking, what could you tell me about the monthly close July for Bitcoin? Great question. Great question, JWD. Let's do this. Why don't we go to let's go to a Bitcoin chart here, if I can. All right. Now, what you're looking at here is a weekly chart of Bitcoin. All right. Historical weekly chart. All right. Obviously, each bar represents a full week of trading. Now, the two moving averages, if you follow my work for even a small period of time, you know that the two main moving averages I'm always going to have on a chart is the 20-period moving average. That's the blue moving average line. They're both simple. And what you'll see, of course, is a 200-period moving average. That's the red line. Now, historically, Bitcoin has never violated its 200-period moving average and stayed with that violation for a very long period of time. It's never done that in history. So if you go back and you look at all the times that there was a brief, what some might call a violation of the 200, I don't call it a violation of the 200, but what you'll see is that there's a brief dip below. It might stay a week or two or what have you below and rocket right back above the 200-period moving average. So this each time was rather unique in Bitcoin's history. There's a violation. And each time Bitcoin has met this key moving average and went back above, as we've just done, it's been buy opportunity. And I believe that we have a generational buy opportunity on Bitcoin right now because of where it is, because of its historical precedent. And it is extraordinarily undervalued in my particular point of view. Now, I think that the question was something about the monthly close. That's the weekly. All right. I think the question was asking about something about the monthly close. Let me get these drawings off here. Let's look at the monthly chart here. If we take a look at the monthly chart, we've got the first monthly close to the upside in quite a while, actually. So Bitcoin topped out, as many of you know, Bitcoin topped out in November of 2021, and has basically been in a bear market decline since then. This decline is not from ordinary technical selling. The drop in Bitcoin over the past 6 months has been quite unique and rare due to forced selling. So there's two types of declines that a market can go through. There's the decline that's caused by natural selling. Individuals who are saying, institutions, individuals, market participants who are saying, I no longer have faith in this asset. I no longer want to be exposed to this asset. I want out, or I want to reduce my holdings. I no longer believe in the future. That's one type of selling. And then there's forced liquidation selling because leverage is built up into the system. This is not by choice. It is selling not by choice. And it is that form of selling that Bitcoin has suffered. The vast majority of its selling is from forced liquidation selling, which typically creates a bigger opportunity than the normal type of selling, right? The forced liquidation selling is usually brief in nature and usually sets up an even more violent snapback in the opposite direction once the liquidations are largely over. Why? Because the selling is not because of a change in mindset regarding the asset. It was forced through leverage. It's different if 80% of the world stopped believing in Bitcoin, and that's the reason its price is falling, right? But that's not the case here with Bitcoin. And the reason why we know that is because of very basic but powerful metrics, all right? So we have, number one, the number of wallets on the blockchain, the number of wallets that have 1,000, that have 10,000 or more Bitcoin in it, all right, are at unprecedented levels. The number of wallets that have more than 1,000 Bitcoin, all-time new highs. The number of wallets that have one Bitcoin, all-time new highs. The number of wallets that have any, even insignificant amounts of Bitcoin on them, that metric is at all-time new highs. And the number of wallets created, that number is at all-time new highs. So Bitcoin continues to get unprecedented adoption as the liquidation in the market has brought the price down. So it's not a decline because the network is not being adopted. It's through forced liquidations. And these are the declines that typically set up the most violent rallies back to the upside in the asset, because the decline is not due to a change in adoption. If I can get you to do one thing through my talks here, guys, if I can get you to do one thing, is as hard as it is, I would love to be able to try to convince you for a period of time not to focus on price. That Bitcoin at the current moment does not have a price. It has an age. It is only 14 years old. It's a teenager. And in the world of new assets, that is uh, that is a very, very young baby. The bond market is 250, almost 300 years old. The equity market in the United States is 180 years old. All right. The gold is 5,000 years old as in its role as money. Silver served even a longer period of time. I believe it's something like 9,000 years old. Real estate, as we know, has been with us a very, very long time. Bitcoin is a baby, so you can't get too hung up with price when it's a baby. You understand? And this is a mistake that a lot of market players make. They start focusing on the ups and downs of price in a brand new asset too early. All right. It's the same mistake that many people that I spoke to about Amazon in 2001, when I was pounding the table on Amazon for the world to buy Amazon at $7.50. All right. And a split adjusted price even lower. I was pounding the table the same way I'm pounding the table on Bitcoin right now. And people were 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 playing it with me, but they were selling for a double or selling when it went up a little bit. And I said, this is you're making a huge mistake. This is the beginning of a baby asset. You don't focus as much on price and rallies and declines as much as you focus on accumulating for the maturity of the baby asset later in the future. So there's one thing I can get across from you. You can't get too preoccupied with price with a baby asset. Bitcoin is a baby asset. All right, guys. What do you think about investing? This is a good question. What do you think about investing in Bitcoin mining stocks? Don't you think they are very cheap? And cheers. Yeah, I do. I actually do believe that our mining companies like Mara and CleanSpark and Riot and Hut, these stocks are greatly oversold. And we can take a look at a few here. We take a look at something like Mara. The bounces have been huge off of the lows. Now, let me give you an interesting statistic regarding an asset and the group of miners that mine the asset. This is the case in any commodity where you have miners. There is a ratio of about 3 to 5 to 1. All right. It's in that zone. Sometimes it's 3 to 1. Sometimes it's as big as 5 to 1. So what does this mean? Your miners will move 3 to 5 times more than the asset that they mine. But this will be the case on both sides. And so when Bitcoin really starts turning and the miners start turning with it, you can pretty much be sure that your mining stocks are going to outpace the gains of the underlying asset by a ratio of 3. And if it's very powerful, it'll be as much as 5 times the gains of the underlying asset. This is the case in gold. It's the case in silver. It's the case in copper. It's the case in any commodity or any asset that has a mining ecosystem around it. And so there are traders that play both. They play the underlying asset, but they go a little further out on the risk curve and add miners to as additional plays to support the total play of a specific asset. Now, you have to understand, though, that your mining stocks will decline tremendously faster, right? Your mining stocks will decline tremendously faster and harder than the underlying asset as well. So if Bitcoin declines 70%, you can bet your bottom dollar that your miners are going to be declining way more than 70%, maybe as much as 90, 95%. And if you take a look at Mara, you can see it fell from $90 more or less, almost $90, all the way to 5. All right, that's 90+%, right? Okay. And so Bitcoin did not fall 90+%. So you do get like Bitcoin is an 80 vol asset, which means that it has a tendency to decline as much as 80%. Your miners are going to be like a 95 vol asset. And you have to be willing to deal with that. All right. But that's interesting to know. So I do think that they're beaten down, they're oversold. I do believe that we might have one more drop in these things. And that's the drop that, in my opinion, is the real playable one. But just keep those ratios in mind. All right. All right. What else here? Keep Calm says there's only 135 people here. Haha, I feel so lucky. We're early. We're early. Guys, we are still early. when it comes to this. Again, as I mentioned to you, Bitcoin is a very baby asset. It's only 14 years old. And think about this, guys. Think about this. The internet was the fastest adopted technology in the history of the world. Okay. Faster than television, faster than radio, faster than electricity, faster than airplanes, faster than cars, automobiles, faster than computers. The internet was the fastest adopted technology in the history of mankind. It was adopted at a rate of about 62, 63% a year. That's incredible. That's huge adoption. Bitcoin is being adopted at almost double the rate of the internet, making it the fastest adopted network in the history of mankind. But if we take the numbers of the internet, which was the fastest before Bitcoin, and we take the current numbers of Bitcoin, how many people have adopted Bitcoin so far? 140 million, more or less. Okay, 135, 140 million. If we take that number and go back to when the internet had 140 million users, you're back in 1996, 1997. Now, we know what happened with the internet. We know what happened from 1996, 1997. We know that the internet took over the world. The internet took over our lives. The internet now has influenced every aspect of our entire lives, all 8 billion people on the planet for the most part. So we know in a relatively short period of time what the internet did from 1997 until now. We've seen the playbook, but now Bitcoin is the internet of money. You see, the internet that we had before was the internet of information, the internet of knowledge. All right. So what the internet did was disrupt information. It disrupted it disrupted the world of knowledge. Okay. I have over 10,000 books, more than the book, more I have more books on this phone, all right? And I even have more books on this one, right? I have more books on this phone than the library that my mother worked in during my childhood ever had in the library. There's more books on this phone than an entire library my mother worked at. That's crazy. All right. So the internet digitized information, it dematerialized knowledge. All right. We now have the internet of money. Okay. We've never had it before. Bitcoin is the internet of money. We saw what the internet of information and knowledge did to the world of information and knowledge. Now we're watching Bitcoin, the internet of money, do the same thing in the financial world. The financial monetary system of the world is the last thing to be dematerialized. Everything else has been dematerialized. Photos have been dematerialized. Books have been dematerialized. Mail has been dematerialized. Do you understand? Maps have been dematerial. Everything is digital. Everything is non-physical. The only area of life that has escaped this dematerialization effect has been the legacy financial system. And Bitcoin came into existence in 2009 to do just that. My point is this, traders. We've seen the playbook already. We know the adoption curve. We know what happens next. We've seen it. But here's the thing. We were not able to buy the internet. Think about this, traders. We were not given the ability to invest in the protocol. We were given the ability to invest in the companies that built on top of that protocol. We could invest in Microsoft. We could invest in Apple. We could invest in Yahoo. We could invest in Amazon. You see what I'm saying? We could invest in Facebook. These were companies that plugged themselves into the protocol called the internet. So we could invest what was on top into what was on top of the protocol, but no one had the ability to invest in the real estate, the actual protocol itself. And for the first time in the history of mankind, we can own the freaking protocol. Not just the companies on top of the protocol, not just the layers that are going to be built on top of Bitcoin. We're going to own the real estate that they plug themselves into. And let me tell you this, you don't sell the protocol. Everyone's confused about this. Oliver, I don't understand it. You teach us how to sell correctly and so forth and so on. Why are you not selling Bitcoin? Why are you not encouraging us to sell Bitcoin? Because you don't sell the land. You don't sell the protocol. You sell the buildings on top of Manhattan. You don't sell Manhattan. A building has a lifespan of about maybe 100, 125 years. Then it's brought down and a new building is built. A better building with better technology, better windows, better steel construction, and more beautiful. All right. This is the buildings can be bought and sold back and forth. But when you own the land is forever. Do you understand this? Tell me you understand what I'm saying. I need you to understand the difference between owning a protocol that is going to increase in value forever and owning a company on top of the protocol that's going to last maybe 100 years if you're lucky. Amazon's not going to last forever. Apple's not going to last forever. These companies have a lifespan that ultimately ends. Do you understand? So I need you to tell me, do you understand the difference between a protocol and then buying and selling the things on top of the protocol? That's what we're going to do. But when we own a piece of the protocol, I don't ever want to let that go. Imagine if we had the ability to own the internet. If Facebook reached a valuation of over $1 trillion and it is built on top of the internet, Apple on top of the internet, Microsoft plugged this business on top of the internet, Amazon, $1 trillion company on top of the internet, Google, $1 trillion company on top of the internet. If they're worth trillions of dollars, then what is the internet worth? Their whole businesses need the internet. The value is in the protocol. More value is in the protocol. Do you understand? So this is why my encouragement is against selling this asset, but just gradually accumulating it, almost as if it's a savings technology. And yes, it's a volatile asset, but that works in our favor. It's the volatility that gives us opportunities to get it good. But over time, that volatility will get less and less and less and less. Amazon was extraordinarily volatile. I sat through 380+% declines, 195% decline, and maybe 18 different 35 to 40% declines over the lifespan of my holding that asset. But that volatility gave me enormous opportunities to just accumulate more. All right. All right, guys. What else here? Okay, Todd says, okay, say you have 1 million into Bitcoin right now. How do you profit from holding that $1 million? So I think what you're asking is, if you're not going to sell Bitcoin, then really what's the purpose? How do I benefit from that? How do I profit from that? Great question. I believe that because Bitcoin is becoming one of the most pristine assets to hold, that remember what I told you, on top of Bitcoin will be built, and it's happening right now, services that will allow you to basically do anything you want as long as you own this asset. It's almost as if like the asset is so pristine that as long as you own it, financial organizations in the future will give you anything you want. You want this car? Oh, you've got Bitcoin as collateral? Boom, here's the car. You want this home? Oh, you got Bitcoin as pristine collateral? Here's the home. All right. And I believe that DeFi, that's called decentralized finance on top of Bitcoin, is being built right now. I believe that this idea of earning something on your Bitcoin is not dead. I know the industry's had problems with that. But in the future, you will be able to own a riskless, meaning that you do not give up your personal keys. You'll be able to earn something on that Bitcoin. I also believe that it will become, and it's already regarded as a pristine asset, that this asset will become so valuable that anyone with any decent amount of Bitcoin will be able to get any financial service they want. And it's the same today with other assets like gold and things of that nature. So I believe that it's a mistake that if you treat this like you treat Amazon or like you treat Apple or like you treat Google, these are companies built on top of a protocol. We're owning the protocol. You can't or you shouldn't be so quick to sell the protocol. All right. That's the number one message here. Now, banks, why do you think the United States has approved all banks in the United States, has approved them to custody Bitcoin? Why? Why would that happen? First of all, banks are requesting, have obviously requested it. And yes, a law had to be passed to basically allow banks to custody Bitcoin. And right now, NYDIG, a major institutional onboarder to Bitcoin, is by the end of this year, 600 of America's biggest banks will have full Bitcoin custody departments. That's at the end of this year. 600 of the US's biggest banks will be custodying Bitcoin. Why do you think these things are being put in place? All right. It's coming. We're early, but it's coming. And you want to be early, guys. You don't want to wait for every single thing to be in place. Bitcoin will be at $650,000 or a million or whatever. You don't want to wait with this. That's my opinion, in my opinion. All right. All right. What else here, guys? What else? Good morning from Canada, Lloyd. Okay, good morning. I find myself hoping you could offer a boss explanation of the one half life of Bitcoin. The one half life of Bitcoin. I'm not quite sure what you mean by that. Clarify. It sounds like an interesting question. I need you to clarify that a little bit for me. The one half life of Bitcoin. All right. All right. Hello, sir. Please, this is from Praven. Please make on price action based video because I want more learning price action with you. Yes, guys, my live technical analysis Thursdays are not gone. All right. You know, that's quickly become one of the most popular things I do on the channel. All right. It is my plan to have my live Thursday, live technical analysis, Thursday, this upcoming Thursday. So be on the lookout for that. And it will have to be held the same time, all right, at 11 a.m. Eastern time. So be on the lookout for that. All right. Okay. Jolis, Oliver, big fan. Thank you. My question is it feasible to make a consistent return scalping options contracts, perhaps in higher quantity for a few points at a time? I find that scalping short term plays with options is statistically a very, very high losing proposition. It's difficult enough to basically short term play the underlying asset. But when you go to options, you're going to a less efficient item that has additional layers of complexity added to it, like time decay of the contract, volatility, volatility metrics. Most people who try their hand at short term oriented trading with equities, as an example, most people are not going to be able to do that. And let's say the failure rate is 90%. Okay. And it's probably higher. It's actually higher than that, but let's just round it to 90%. When you take, and that's trading just the black and white asset. All right. That's just plate trading Apple. If Apple goes up $1, if you buy Apple um, at one price and it goes up $1, you make $1. And if it goes down $1, you lose $1. That is clean. It is not complex. It's black and white. But when you start to trade the options that are based on Apple, a $1 move in Apple may not correspond to a $1 move in your option. A $1 drop may not correspond to a $1 drop in the option. And so now you've gone to a level of difficulty that is higher, more complex, less certain. All right. And that means that the failure rate in short term oriented trading of options is going to be higher than the failure rate of trading the underlying item. It's very simple. I have seen traders get the direction right, get the play right, the tactic, the strategy right, but they do it with the wrong option. And so the stock did exactly what they thought, but because they did not get the pricing of the option right, the option didn't even move. I've seen a stock run $1 and the option actually go down in value when they thought that the option should actually track the same movement as the stock. And so I'm not a fan of short-term oriented play with options. I'm a fan for using them as a hedge against bigger positions. I'm a fan, more of a fan of maybe, you know, longer term trades. I like the leaps. I like synthetic stock. I like creating synthetic stock positions with deep in the money options. And that's another thing. Most people are using options because they lack proper capital. And so that is why they're playing options. And that's typically wrong. The cheapest options, that's the highest failure rate. The more expensive options, you actually improve your odds. But most players are not playing the most expensive options. They're playing the cheapest options because they're undercapitalized and they're using the options world as a poor man's racetrack. And that's exactly what basically it becomes for most people. The last thing I will say about this is that most options expire worthless. So the edge in options are on selling or writing options, not buying options. So the most consistent winners in that game are basically selling hope. Options are a game of hope. They sell hope. All right. They rarely buy hope. All right. All right. All right. And Europe, and Europe is asking, my question is, what are some alternatives that can challenge Bitcoin? The only thing that can challenge the viability of Bitcoin is all governments go on a very sound, solid monetary system all at once together in a cooperative way, and they stop freaking printing or devaluing or debasing their currency. Now, what's the odds of that happening? The opposite is basically the opposite's going to happen. But the only threat to Bitcoin is sound governmental monetary policy. Bitcoin was created to be the antithesis of poor government monetary policy, which means that sound policy would be basically a complete stop, a complete, basically a complete 180-degree reversal of the fiat standard that the entire world is on, but not just one country. One country is not enough to put a dent into Bitcoin's future. It would have to be the entire world. Now, the odds of that are so incredibly low that there are zero challenges as far as I'm concerned. It's the closest thing to a zero chance that we possibly can come up with. All right. Now, if you were to ask me, what are some of the things that uh, uh, potentially can put a dent into the adoption of Bitcoin? If Bitcoin were to be hacked, I think that that would be a very serious issue. Now, think about this, guys. There's only one network in the entire world that has never, ever, ever been hacked. That is Bitcoin. Every single computer, every single network in the world has been hacked over and over and over again. Every bank, every government, every country, every organization, every other cryptocurrency, every other protocol in the world has been hacked except Bitcoin, which makes Bitcoin the safest, most secure network the world has ever known. And get this, every 10 minutes, it gets harder to hack. So if you didn't hack it 10 minutes ago, the odds of you hacking it 10 minutes later has actually gone up exponentially. Every 10 minutes, Bitcoin becomes less hackable, becomes stronger, longer, taller, more powerful, more invincible. So if you thought that there was any chance to hurt Bitcoin, right, 10 minutes ago, it's harder to hurt it 10 minutes later. And it will be harder the next 10 minutes and harder the next 10 minutes. So if you didn't hack it before, you're not hacking it now. And this will go on forever. That's crazy for the most part, or at least forever as far as we're concerned, for the next 118 years. Wow. 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 If it hasn't faltered, it's not going to in the next 10 minutes. Less odds of it faltering in the next 10 minutes. If it hasn't been hacked, less odds of it being hacked in the next 10 minutes. Every 10 minutes, this vault, I like to have some people look at Bitcoin like a vault as well. This vault that protects your value and your life is unbreakable, unstoppable, unhackable, and only you have the key. That is insane. Never in the history of the world have we had property rights that were totally self-sovereign, like Bitcoin? As an example, do you really think you own your own home? You can't take it with you. You can't move to a different country. Get in trouble with the law or with your finances and watch how quickly you realize your home is not your home. You don't really own it. You don't really own the money in your bank. You don't really own the stock that's supposedly sitting in your brokerage account. It can be confiscated. It can be denied to you. It can be cut off. It can be frozen. It can be taken. Your property can be taken by the government. This is the first time that we have an asset that is totally 100% owned by you and no one can take it. You can give it up, but no one can take it. This is crazy. Property rights, true property rights, are being brought to via Bitcoin, being brought to all 8 billion people on the planet. This is freaking mind boggling. And it has incredible implications. All right. With just 12 words, your wealth, your value, your life is always with you. And how do you destroy words? How do you ban 12 words? How do you make 12 words illegal? You can't. How do you kill 12 words? You can't. It's invincible. Pretty incredible. Hi, Oliver. I follow all your strategies. It works exactly as you teach. Lately, I get to see a lot of um, advert on order flow. I hear it every time I tune into your channel. Can you please throw some light on order flow? I'm not quite sure what you mean by order flow. But let me take that question, and this might not be your question, but this just popped in my head. So let me just ramble about this for a second. One of the questions I get quite frequently is people notice that I don't use volume very frequently or don't talk about volume, which is a form of order flow, very often. And the reason is because volume has increasingly become a very unreliable um, technical indicator for a, a, a stock with institutional sponsorship, meaning that if you're trading an Apple or a Microsoft or a Meta or a Square or a Starbucks, these are stocks that have very deep institutional sponsorship, which means that you've got institutions buying them and selling them. So there's just a lot of volume. You don't need volume to indicate anything for you because you already know these stocks have institutional sponsorship. Now, when I first started trading, only a small handful of stocks would get or have institutional sponsorship. So, for instance, you would use volume to determine, oh my God, an institution must have just started accumulating this stock. It never gets volume like this. All right. Today, everything I trade has institutional sponsorship. There's no need for me to detect whether or not institutions have finally discovered this stock. Institutions have discovered Apple. Institutions have discovered Google. Institutions have discovered Amazon. They're in and out of it all day. So, in addition to that, many of the techniques I teach you are designed to get you into a play before volume spikes. And so the reader of volume looking for a surge in volume to confirm something. That's typically how volume is used. They look for confirmation by a volume surge, right? My strategies typically get you into a play before that surge occurs, or you are part of the volume surge. And those who are waiting for the volume surge actually follow you in late, right? So it's just, it's become less and less important over the years. And the last thing I will say about that is a good portion of your volume is now runs through dark pools and gray pools of liquidity, which means that it doesn't even hit the tape until a later time or at the end of the day. And so institutions, for instance, I have access to 11 dark pools of liquidity, which means that I can choose to send blocks of orders through these routes that no one can see. That's why they're called dark pools of liquidity. And so you won't see the volume show up. That volume is collected and then printed at the end of the day. Some of you may have seen at the end of the day when an equity closes, a volume spike happens. That's a lot of the collected volume from earlier in the day being printed all at once at the end of the day. All right. And so because of these tricks and these additional ways that institutions hide their activity, the volume indication is not as accurate as it used to be. So volume used to be important when I began trading in the early to mid 1980s, even into the 90s, but it's become less and less important starting in the 2000s when these additional ways of hiding came into effect. All right. All right. We take. Hi, Oliver. Thank you very much. Every time hearing your sharing will give me the confidence to continue trading. Thank you for your great work and may God bless you. Thank you very much. I appreciate that. Yes, I regard one of my responsibilities, obviously, is to teach my traders what I know. But another responsibility, I should say, is also to keep them motivated because the path or journey to trading prowess, trading success, trading mastery, whatever term you want to use, that path is bumpy and sometimes it's dark and sometimes it's lonely because it's rare when you get um, a lot of people that understand your passion for this activity we call trading. And so it's often a lonely road. It can be very dark and somewhat depressing at times when you're going through a bad trading period or a rut and you seem not to be able to get yourself back to this winning state. All of those periods are necessary. And I recognized that if I had someone during my developmental years that told me, don't worry, that you're supposed to experience these things. You're supposed to think you have it and then it goes away. You're supposed to lose. You're supposed to learn every mistake, every possible way to lose money. And you're supposed to get to know it intimately, that you're supposed to go through loss and you're supposed to not stop until loss winds up behind you like a tunnel. And if someone explained these things to me, if someone explained the fact that you're supposed to master loss first, then you start working on profitability. If I had someone that told me these things, I wouldn't have gotten as depressed during certain periods. I wouldn't have almost given up at certain periods. I wouldn't have felt like I was such an idiot at certain periods, if I just understood that this was part of the journey. So that is an integral part of my responsibility with you guys to make you understand that you can't become a master until you've been brought to the breaking point multiple times. You can't become a success unless you first learn how to lose and become intimate with loss. That you lose your life first, then you gain your life. That you step back first, then you spring forward. That in order to leap, you must first squat. This is the natural order of things. And I didn't know that. And it made my journey harder. And so that will always be an integral part of what I do with you. I will try to motivate you, and I will constantly remind you that that your future wins are with you right now. They're locked inside of your current losses. All you have to do is crack them open. They're there. Your future wins are inside of your current losing trades. Crack them open, investigate, right? And if you're constantly doing that, then you're taking winning steps on the journey. Doesn't matter what your account says. It doesn't matter how poorly the numbers, how poor the numbers are. If you're cracking your losses open and investigating, minimizing some of the mistakes you discover by investigating the losses, you're on the winning path. All right. Cornbread, God bless you, Oliver. God bless you as well. Bob Cruz, hi. I just discovered you and have been binging your content. Well, I appreciate that. Thank you. On your 2-minute charts, I noticed that you don't have pre-market after hours on your chart, pre-market data or after hours data. What is your philosophy on that? All right, good question. Think about this. Bob. When you go check the final prices of a particular stock, all right, you might use Yahoo Finance or whatever you use. You just check the price and you check the open, the high, the low, the close. The exchange doesn't include any activity that occurred before the bell, the opening bell of that market, and they have not included any activity that has happened after the bell. It's completely out of the data, out of the numbers. There are scenarios where in pre-market open trading, a stock can trade higher than it ever does when the market opens that day. And that higher price is not in the numbers. So if the exchange doesn't include it in the numbers, why do you think you should? You shouldn't. It also will skew your moving averages. So if you include pre-open data that is not ultimately going to be part of the data that the exchange uses as the final data set that day, your moving averages can be off. And that's one of the last things you want to be off. All right. So don't include pre-market data in the formation of your moving averages. You want that off. Don't include post-market trading data as well. It'll throw your indicators off. It'll throw your moving averages off, and you don't want that. It also, in my opinion, encourages that a trader lean in one direction or another. So that's a very dangerous thing to do, to go into the open of the market leaning as a shorter or leaning with a bias to the long side. We can't know what the first 2 or 5 minute bar is going to be. So you should not be leaning at all until the first 2 minute, at least the first 2 minute bar is complete. There's no leaning because we don't have the first bar. But when you're watching pre-market data, it's almost like your mind thinks you're watching the first bar. And so it'll cause you to lean to the left or the right or long or short. And that's a big mistake. There's a lot of games that's played with pre-market data. I used to be a master at playing, tricking novices in pre-market data times. All right. Putting bids that I had no, this is not really legal now, but it used to be, putting bids that I have no uh, intention of filling, having someone shoot an order at the bid and I cancel the bid, but I've got a lower one down here and they get the lower price and they thought they were going to get this price, but I cancel that one and they hit my lower one. Boom. And all of those things we used to do in pre-market trading with traders that did not really know what they were doing at that particular time. So be careful with that. But most importantly, don't include it because it's going to throw off your moving averages. Okay, Prashant. Hi, Oliver. In this fast-paced world, is patience still the winner in any aspect? uh, okay. Yes. One of the problems is that socially, we've been more and more conditioned to have what is called a high time preference with everything instead of a low time preference. And one of the things that Bitcoin does is it helps you change your high time preference into a low time preference. Much of the world's problems is due to this thing that we're talking about right now. High time preference, I want everything in a short period of time versus low time preference. So if you go back in history and you think about all the things that we consider to be marvels, great, the pyramids, various temples and cathedrals, these things took hundreds of years. That's a low time preference. To have someone dedicate their entire life to a painting or some single craft, or 3 generations worked on completing this cathedral, that's a very low time preference. When you're working on something that you know is not going to necessarily, that is going to take time, it is going to take energy, it is going to take effort over a period of time. The best things have always come from that. The things that we honor most have always come from low time preference activities, low time preference thinking, a low time preference way of being. And everything crappy has come from a high time preference, a lack of patience mindset. I want it now. I want a gourmet, I want a gourmet 5-star meal in 2.5 minutes in the microwave. That just doesn't match. It's not going to happen. Right. And so I believe that patience continues to be one of life's greatest virtues. And I wish people had more of this low time preference thinking when it comes to trading. But if you really think about it, this is what Bitcoin's proof of work protocol is. It is the fact that it requires time every 10 minutes, more or less. Bitcoin produces another block, right? Time and energy, or another way of saying energy is effort. So Bitcoin puts the two most valuable things in life together to create value: time and energy, or effort. But what does the cheater want in life? I want it without time and I want it without effort. That's a cheater. That will always produce a crappy life, a crappy result, a crappy product, a crappy everything, right? Time and effort in your trading, all right? Your trading success is going to take time and it is going to take effort. It just doesn't fall out of the sky. I'm sorry. It just doesn't appear one day just because you sat down at your computer. You understand? It's going to take time, but not just time. That's not enough. There are many people who are trying their hand at trading for 10, 12, 15 years, and they're still chronic losers. You need more than time. You need effort, time and energy or effort. And that effort has to be correctly applied as well. Not just any effort. It has to be productive, efficient effort. All right. And in the blockchain world, these protocols that are trying to do away with time, right, and energy have the whole concept of value wrong. The whole proof of stake is wrong. Proof of stake is what we have. Proof of stake is what we're escaping from. Because I have a bigger stake, I have a bigger say. We already have that. Because I have a bigger stake, I get a bigger reward. We already have that. That's the system that we're leaving. All right. And because I have a bigger stake, I don't have to work. I don't have to put time in. I don't have to work for anything because I have a stake. We already have that system. I don't buy into proof of stake. I'm sorry. And for all of you who support that, I'm just sorry. I just don't. All right. That's not how life works to me. It's proof of work. Think about this. When you become a powerful, profitable trader, that should be proof of your work. Your success should be proof to everyone that you put the time in the chair. You put the time in studying. You put the time and effort into learning. You put the time and effort into getting your losses under control. You put the time and effort into becoming more disciplined. You took the time and effort. You put the time and effort into understand the market's idiosyncrasies, its tendencies. Your success should be proof to the world that you did something, that you sacrificed. It should not be proof that you had a connection, that you were born in this family. Your success should not be proof that it should not be because you had the right color or you were born in the right country. You understand? Or your great grandfather was the town mayor or whatever. It should be not proof of your connection or proof of your last name or proof of the stake you have from daddy. Your success should be proof of your work. And that's what Bitcoin's proof of work protocol is. It is proof that time was required and effort and work and energy was required for me to have this value. It doesn't say anything about my last name, my color, where I was born, how much money I have. No, it's proof of work. And that's what we want. You follow what I'm saying with that? Does that make sense? All right. Faturn is saying combination of moving averages with Fibonacci 50% levels is working so good. Yes. And you've got that percentage really nice too. 50%. Don't forget your others. You know, you've got your 50% level, you've got your thirds on either side of the level. So there's always that kind of 66% and then that 33% and then that 50%. But those are the main three, and boom, you're set. You're set with those. Throw the key moving averages on that. Don't forget your 50, 66, 30, 33% levels, and you're good. Hello, Oliver. I want to meet you. I'd like to meet you too. All right. All right. Anand is asking, how percentage return per day? I guess he's asking, what percentage return per day should be the target of a 4 to 5 years experience future trader, no options? You know, I think, first of all, most traders do not think in terms of percentages so much. That's more of an investment concept. All right. And let me give you an example why. All right. So let's say a trader has $50,000 in an account, but it's leveraged 100 to 1. Okay. So we're talking about a $5 million account, but it's $50,000 backing the $5 million. So this trader might make 10, this trader might make $5,000 on his first trade. That's a 10% gain on his capital in one trade. Do you understand? But that's silly. So if a trader could basically say, oh yeah, my average my return last year was like 240,000%, or my return was, you know, my annualized return was this. It just, the numbers start getting silly, right? So we don't think in terms of percentages so much. So much. Um, the the percentages come more in line with what percentage of my original capital am I going to risk in a week. That will give me how much I should lose, the maximum I should lose in a day. And then that should also help me arrive at what's my maximum loss per trade. So we do think in terms of percentages that way, usually on the loss side, not so much on the winning side. If you were to force me to say something, um, I would say it depends on if you're using leverage. It's so hard. But I would say that if you're doing 2 to 5%, that's a really, really, really phenomenal, solid, doable return, right? Melissa, everybody, please press like. I appreciate that. Thank you. Thank you. I appreciate that. All right, let's see here. Let me take one more, guys. Break. Oh, yeah, Pamela. However, which wallet is better, a cold or a hot wallet? Well, they both have a role. So the question is it better to have a cold wallet, which is not connected in any way to the internet at all, or a hot wallet, which is connected to the internet at least at times? And so you should utilize both. And I want you to think about, your cold wallet is like the vault in your house, the safe in your house. You don't walk around with your safe, right? Your hot wallet should be considered like the wallet you would keep in your pocket. Okay. And so there might be times when you're going to use the hot wallet, right? The hot wallet can be something like Moon Wallet. If you have Android, I like Samurai. I like Samurai Wallet for Android. If you don't have an Android based phone, I like Moon Wallet is another. But you might be in a situation where you do something and demand to get paid in Bitcoin. So you do a favor for someone or whatever. You say, no, you got to pay me in Bitcoin, which I strongly encourage that you do. You're going to need a hot wallet for that. Boom. All right. You might take a vacation and you see someone with a coffee shop that accepts Bitcoin. And just to support them, boom, use your hot wallet to pay for your coffee or whatever, and then you replace those sats later. All right. I don't believe in spending, but I don't believe in spending right now, but I do believe in spending and replacing to support the network and to support people who believe in Bitcoin. So that's what I do. Um, uh, I might take small little Bitcoin payments for someone. Someone said, "Can I pay you in Bitcoin?" Sure, you can pay me in Bitcoin. Boom, that's my hot wallet. And once that balance in my hot wallet gets to a certain amount, I might move it to cold storage. But I'll always keep, just like my wallet in my pocket, I'll keep a walking around amount in that hot wallet. But it's there to receive small amounts, and of course there to support people who are in the space for small amounts when I run across that. And so you do need both, in my opinion. But Moon Wallet is a phenomenal wallet for both Android and um, uh, uh, iOS. But I really like Samurai for Android. They're not on iOS, but I do like the Samurai wallet. Beautiful thing, guys, is that these things are free. This is absolutely free. This is why it's going to take over the world. There's no signing documents and where do you live and what's your educational background and da 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 da. There's no opening up an account like you have to do in a bank and hoping they approve you. You can plug yourself into the network right now. And some people have asked me, said, Oliver, but if the whole world is eventually going to have Bitcoin, a lot of the world is very poor. How can they buy it? No, you're going to earn it. You're going to earn Bitcoin. You're going to deliver value to the world. What is the value you're going to deliver to the world? And you're going to receive Bitcoin. You won't have to pay for a wallet. It's all free. All you need is a phone. There are more phones on planet Earth than working toilets. Do you understand? It doesn't matter how poor of a country you go to, they have phones. Trust me. I've been to a lot of them. They all have phones. All right. Homeless, they have phones. All right. So it's pretty amazing to me that anyone on planet Earth can plug themselves into this network. And if you're supposed to be able to deliver to the world something. You are here to deliver something of value. Now, if you can't do that, you've got problems, but you've got to have something of value that you deliver to the world, and you can receive Bitcoin. And so if you think about this, guys, we have never had, outside of gold, never had a universal money that everyone has access to and that is not in the control of anyone. We've never had that. We had it in gold, but gold was co-opted by governments. They hoard it now, keep it close, and they have denied ownership of it. And they will not let you leave your country with your gold. I promise you this. If you have amassed a huge holding of gold, try leaving your country with it. Watch. It's not going to happen. So this can't be done with Bitcoin. Now, guys, look, some of you know this, but every 6 months, I open the doors to my Bitcoin trading club. Now, I call it Bitcoin Trading Club. That's really not right because we don't trade it. We just accumulate it. But the club, we take this journey together, guys. I show you every move I make with my Bitcoin, my buys. I show you where I'm placing my buys, when I'm placing my buys. I go over the strategies in which I accumulate because I don't accumulate Bitcoin the same way all the time. All right. When I'm heavy, when I'm doing light, Also, there will be a time when it's necessary for us to hedge our position in Bitcoin to soften the blow when it's in a downward movement. I think it's a little early for that, but there's going to be a time where we start hedging in the futures market. We're going to use the futures market to hedge a portion of our accumulated um, Bitcoin. We will not only hedge, but the club is also designed to deepen our knowledge and understanding about Bitcoin. I'm doing the same thing. We take this journey together. We go down the various different rabbit holes here, and I want to show you something here, if I can. But we have things here. If I can show you this, we have things like deep dives on things like the 5 best hot wallets, 5 best ways to spend Bitcoin when it's time to spend it. Let's go over the 5 arguments for Bitcoin. You should always know the 5 arguments against your asset as well. What's the best ways to pick up non-KYC Bitcoin, or Bitcoin that does not have your name and identification attached to it? All right. Where it's illegal, I'm a big believer that you should have non-KYC Bitcoin, Bitcoin that is more private, and of course, KYC Bitcoin as well. So these are the ways we deepen our understanding. We'll talk about things like the network, Bitcoin's energy consumption. We'll do deep dives and go over so that we understand things like the UTXOs, which are like the bills in your wallet, the little pieces of Bitcoin that are literally the Bitcoin inside of a wallet. It is necessary for us to become very solid, well-informed Bitcoiners. This is more than an investment. It's more than an asset. I believe that it is life itself in the future. This is going to replace, in my opinion, the monetary protocol of the world. It's actually rapidly already starting to accomplish that and do that. We need to understand it now. I believe that in a very short period of time, Bitcoin's going to run away from us traders. We don't have time. Bitcoin's going to run away from that 200-period moving average. Do you understand? Bitcoin is going to outprice most of the world. We have no time, guys. Do you understand? We don't have a lot of time. And so I will not be doing this forever, but as long as the time is ripe, I will. All right. And I want you, I can get this here. And quite honestly, I just want my traders prepared. I've done the same thing with Apple in 1997 with my traders. All right. I did the same thing with Amazon in 2001 with my traders. I did the same thing with gold in late 2004, early 2005 with my traders. And I'm doing the same thing with you now with Bitcoin. I have a pretty decent record of finding these major wealth trends that can change your life. All right. These things have changed my life. I'm proud to say I've helped many, many traders change their life with these plays as well. It's Bitcoin's turn. All right. So I strongly encourage that if you can join us, and I try to make these things as I do try, guys, to make these things as affordable as possible. I wish I could do it for free, but I really can't. Right. I've got a team. I've got technology. These things have a cost to bring them to you. There's a cost to bring them to you. So unfortunately, I can't do it for free. I would love to. I will do sessions like this for free forever. But If you're interested in deepening the journey with me, let's do this step by step. Let's not do it alone, at least for just a 6-month period. All right. And that cost for you, if you're interested, um, it's less than it's $500 for life. So if we're going to take this journey for life, that's the one to go with. If you just want to take it for 6 months, see how things go, we'll be together every single week for 6 months, every single week for 6 months. All right, it's $147, but that's a very small price to pay for what I believe is going to be life-changing for all of us. All right. So I want to thank you guys. I know that there are many things you can be doing with your time. Thank you so much for continuing to support the channel, guys. I am reading your comments. Wow, wow, wow. You're amazing. If you haven't subscribed to the channel yet, please do make sure you click the bell in the upper right-hand corner, wherever that is. Click the bell in the upper right-hand corner. Turn all notifications on so that every time I do a live or every time I come out with some content, I don't want you to miss it. These pieces of content that I put out here on the channel, guys, they almost through osmosis, they build the bricks of your trading journey brick by brick in a way. And so you might not feel it or see it instantaneously, but over time, these pieces kind of come together and start to form a cohesive whole. So try not to miss anything. Like the videos, your comments are extraordinarily welcome. They do help the algorithm. And please, guys, be careful out there. There's a lot of fake Oliver Velez accounts that are trying to defraud you out of your capital. Just be extra careful. I am OL Velez 007, no dashes, no periods. It's 007, not 007. Be careful with tricks like that. Look at the number of followers. All right. I'm not the biggest out there, but the numbers are fairly healthy. A lot of these fake accounts can't fake the high number. All right. So check the number of followers. Make sure it's healthy. You can always write me directly on Twitter, DM me. I can't read through a lot of them every day, but eventually I will try to get back to you there. All right. And make sure you're dealing with the right URLs. Okay. OliverVelez.com. If you're ever in doubt, there is iFundTraders.com as well. There's a few, but OliverVelez.com will get you everywhere. My name, OliverVelez.com, will get you everywhere. So when in doubt, OliverVelez.com. All right. That'll get you to everywhere you need to be, and it'll get you speaking to the right people. I love you to death. I don't want you to forget this upcoming Thursday. We're back here live for Technical Analysis Thursdays. All right. Hoping my technology is going to be okay during that period, but we're going to give it a shot. All right. All right, guys. Ciao for now. Enjoy the rest of your day. Enjoy the rest of your afternoon, your evening, wherever you are in the world. And know that I am your trader for life. All right. Ciao for now. Boom. Another one. Another one. Yeah.